Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you from Global Alts in Miami by iConnections, and joining me for this segment, we have Christopher Jensen. He's Portfolio Manager and Head of Research at Franklin Templeton Digital Asset Investment Strategies Group, and we're here to discuss the trends that are shaping institutional allocations to the digital asset space. It is great to see you again, Christopher. Thanks for joining us. And when we spoke about the last 18 months, maybe 2 years ago, a lot has happened in the landscape, certainly, within the past 12 months for sure. What are some of the key trends and areas of focus that institutionals are thinking about when they're allocating to the space?
Yeah, thanks, Jill, and appreciate being on again. It's great to see you. A lot has happened in the last 18 months, and this is our second time that the digital assets team at Franklin Templeton has come to this iConnections event, and I'll tell you, there's definitely a noticeable difference, this year versus last, both in terms of, I think last year we were trying hard to get the meetings and the one-on-ones set up, and there was a lot more kind of inbound, questions, inquiries, and actually allocators looking to set up the meetings because they're continuing to want to get educated on this space as it evolves, stay up on the trends, and actually they're getting a lot closer to writing checks, whether that's into the ETFs or into other products like venture and tokens, and so and this time around we're actually getting questions on how do you value these things. So right. It's really evolved from what is it to how should I think about its place in a portfolio? What should I fund that with? What's the right sizing? What does this do for my portfolio? In addition to updates on what the technology is doing.
Well, and that's a great point that you bring up, because I feel as if the market infrastructure part and starting to see that integration and being familiar with terms like custody, that's something we get in the TradFi space. Even if you think about global alts as a category, it used to be music royalties, real estate, wine. Digital assets has a firm space in there now, along with private credit and some of the other areas that you think of in the alt space.
Yeah, definitely. I think Bitcoin kind of its own thing because it gets referred to as digital gold. Right. That kind of store value asset. The use case in its role in a portfolio really as a hedge against, say, fiat debasement and some of these global uncertainties. So, but putting Bitcoin aside, a lot of these other assets, whether they're blockchain-based companies or the tokens themselves, like an Ethereum or a Solana, these are technology assets. And as the asset class matures, becomes more institutionalized, and the data gets better, we can actually really start to measure key adoption trends, key revenues, profits, where those are going, and that sort of thing. So it is a technology play, but what we've seen is that it's less correlated to other traditional assets. So you do get those asymmetric returns to the upside, but because of the lower correlation to traditional assets, you get some benefits from diversification in that portfolio.
Well, you bring up a good point too when you think about it from the lens of Bitcoin is in its own space, and then you have the Ethereums, the Solanas, and so forth that is building the infrastructure. That doesn't necessarily mean just digital asset finance infrastructure.
Right.
That's infrastructure for a number of applications. It's almost like saying, we can only use this XYZ chip only for automobile use and not elsewhere.
Yes.
So there's multiple applications for what this is building.
Yes, definitely. We're seeing lots of use cases come. Everybody talks about stable coins. The ability to send $1 anywhere in the world for under a second, for under a penny. It really is a kind of a 0 to 1 moment. But outside of Bitcoin as stateless money and stable coins, we're seeing things like using token incentives to bootstrap a network that actually touches the real world. So it could be a 5G network in the case of a company called Helium, or it could be storage or a bandwidth, digital compute. These are the types of networks that you can use token incentives to actually think of it as like crowdsourcing your CapEx, right? So we're seeing that. I think the intersection of blockchain and AI, super fascinating. So we're seeing the emergence of these AI agents. Some of them don't do anything, but others you can really see the glimpse of real breakthroughs here. So it's an area we're pretty excited about as well.
Yeah, so when you think about your outlook,
it
seems as if it's more utility focused than just a Bitcoin as an example, how it's trading, the products that we can create off of it. And of course, there's incentive to create products, but it sounds as if yourself and others, it's utility, and it's starting to become ubiquitous when we think about technology moving forward and how we think about global commerce and banking systems.
Yeah, you're exactly right. And I think if we look at as a firm, Franklin Templeton's own use of this technology, it really highlights both of those points. We first started doing it as a cost savings exercise, by tokenizing tokenizing a money market fund, putting it on chain, and seeing that radical reduction in costs, there's clearly benefit to that, and we have a lot of funds in the asset management industry does at large, so it's a huge opportunity, right? But then we started to see the added benefit, the added utility. For instance, in a yield-bearing product like a money market fund, if we were to transfer that token, the yield actually transfers in real time. So you would start picking up that yield the second after I transfer it to you, right? And so you can do things on crypto rails that you just couldn't do before. And so that's what we're pretty excited. You can imagine any kind of network, like a rideshare network, like an Uber or Lyft, without the need of the company in the middle. It would just, all the value would be distributed between the users, the riders, and the drivers, right? So any of these types of marketplaces really are ripe for kind of blockchains to fit in there, and it's not just cost reduction, but also increasing the utility.
Right. All right, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me from Global Alts. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.